Hello, everybody. This is Toni Turner, and welcome to the market now. Actually, we're here on Saturday, July 5th. I hope you all had a wonderful 4th of July. So now on to the market. Investors will be keeping a close eye on tariff headlines out of Washington this coming week as a temporary suspension of import levies is set to expire. If Wednesday's deadline passes without an increase in trade tensions, it could prove positive for the markets. And at the moment, negotiators from more than a dozen major U.S. trading partners are rushing to reach agreements with the U.S. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, the SPY closed out the week today, and as you all know, the market closed Thursday at it was about 1 o'clock. It was 1 o'clock in the afternoon. At any rate, the SPY closed out the week here at a new all-time closing high at $625.34. That's about 2% above its prior, and now what was our all-time closing high is now our prior all-time closing high on February 19th at $612.93. So right now, of course, we're above that, about 2% above it. The SPY is now sitting at a premium to the red line, the 20-day moving average. Instead of being on top of it like it has been for the past few weeks, it's trading above it at a premium to it. The 20-day is coming in here at about 605 and change. The 50-day, the green line, is coming in at $587.19. And the 50-day, if you'll note here, the green line just crossed above the black line. The black line is a 200-day moving average, and this is always a bullish sign. Doesn't mean the market can't come down, but it's always a bullish sign in the intermediate term when you see the 50-day cross above the 200-day. And the 200 days coming in here at 582.67. Now, we know here that since our April low down here was at $480.80, the SPY shot higher in this nice, beautiful uptrend that we've experienced to where we are now. So from the lows here to where we are now, we've had a 30% gain. Nothing we can complain about there. Now, we know that since this past February all-time closing high back here at $612.93, we know that the SPY rolled over at that point, fell down in March, fell down below its 20-day, its 50-day, below its 200-day, fell down in March, then tried to bounce back up and get over the 200-day, and the 20-day couldn't do it. And then, of course, fell to what we'll call 482 to round it off. And then it rallied back up here and then pulled back here to 508. So we'll use that as a potential support line. Then rallied back up here, went back up above the 20-day, the 50-day, and the 200-day, back up here to about 595. Dipped here to the 200-day moving average where the 20 was coming across, and then kind of walked sideways but climbing all the time, walking up the 20-day moving average again to where we are now at about 625 and change. So again, nothing to complain about here, about a 30% gain. So what I do want to look at here is we look at this and say, what do we do next week? Look down here with me at the 14-day RSI. That's the relative strength index. Now, as we know, whenever the RSI moves above the 70 line, that means that the market is overbought, at least in the short term. And it has done that now. In fact, it's pretty high right now, higher than I've seen in a long time. The RSI right now is at 74 and change. So it doesn't mean it's going to roll over and fall immediately, but it does mean that it is overbought in the short term. So just something to keep as a note on the side of your computer. Going forward, because we're at all-time highs here, there's no real resistance here except for where we are to look at here. Potential support down here, we can go back here to the all-time closing highs back in February. That was at about 613, so we can use that as potential support. Then, of course, we've got the 20-day moving average here at 605. We've got this pivot. Let's see, we've got a pivot here at 592. So that's right down here. We've got the 50-day moving average coming in here at 587. Again, we've got the 200-day at 582. We do have a gap here at 578, and then we can say and all the way down from here down to 508. Hopefully we won't need that in the future. So, but lots of potential support here should the SPY feel like in the coming week that it does need to pull back or take a rest here. Again, we're overbought in the short term, and we've had a beautiful run. So at the moment, I've taken a few profits, and I am firming up my protective stops. Our next chart today is a daily chart of the QQQ, which the Invesco QQQ, which of course follows the NASDAQ 100, the top 100 non-financial stocks in the NASDAQ stock market, including the Magnificent Seven. So the Qs closed out the week at a new all-time closing high here at $556.22. That's 3% above its all-time closing high back here in February 19th at $539.52. So looking back over here at the hard right edge of our chart, we see that the Qs are trading nicely and at a premium, just like the SPY, to the 20-day moving average coming in here at 537 and change, the 50-day moving average coming in here at 515 and change, and the 200-day coming in here at $503.23. Now, if we look at our April lows down here, which of course everybody had April 7th lows, that was down here at 402. From that 402, we've come up in this uptrend here to where we are now. It's been a 38% run up. Again, nothing we can complain about there. 38% is very, very good in this short time period. Now, since the Qs made that all-time closing high back in February at 439.52, we know that it rolled over again. It rolled over and dropped down to this low down here at 402, down to 402. Then it rallied up on April 9th to 468. It hit its head on the 20-day moving average right there, then pulled back to 428, so touched that low, then pivoted there, and then climbed up to the May 19th high up here at 522, then dropped down to 505, then started walking up the 20-day moving average to where we are now again at 556.23. There's no resistance here that we can look at because we're at the all-time highs. Potential support here, of course, is back down here at 540 from the all-time highs back in February, so we can see there. That's also the 20-day moving average. We've got this little pivot here just above that. We've got support down here at about 525. From that little pivot, we've got the 50-day moving average here at 515, 503, and so forth. So just like the S&P 500, plenty of near-term support here, potential support we should call it, certainly if the Qs need it. If we look down at the 14-day RSI here, we see that it is overbought. It's 71.87 over 70, not as overbought as the S&P 500, but certainly overbought, so just something to keep an eye on here. So the Qs, like the SPY, may have to slow down and take a breath. Just remember that when markets get like this, it's wonderful and it's fun, but traders do take profits. So, a little bit of selling here potentially could just pull it back in for a breather, and that would be perfectly normal. So as always, please keep an eye here on your protective stops. Our final chart today is a daily chart of the First Trust Cloud Computing ETF, the SKYY. I'm just going to call it the SPY as the sky, as we're talking about it. It has 61 holdings. Top holdings include Microsoft, IBM, Pure Storage, Google, Oracle, and Amazon. And I always give you those stocks, the top stocks, the top holdings in the ETF, in case you'd like to look at them yourself. Just look at those on an individual basis to see what they're doing. Okay, so the sky closed out the week here at $123.14, trading above its major moving averages here, above the 20-day, which is coming in at 118 and change, above the 50 and 200, which are, if you can see here, are right together, and the 50 is in the process here of attempting to climb over the 200-day moving average. Again, that is a bullish signal when we get it. So they're right together, the 50 days coming in at 114 and the 200 days coming in at 113.84. So they're right together here. So that's good potential support. Now, if we look left on this chart to see what's going on, we can see back in February here that the recent high on this chart in February was $131.54. Then, like everybody, the SKY, or the sky, rolled over, dove down to March lows here, fell below its 20-day, 50-day, 200-day, down to the March lows at $102.71, then rallied up here to 114, couldn't stay, then fell down to April 7th low here at 85, then rallied up, then fell back down here, but made a higher low, and that's what we're always looking at. When stocks and ETFs and so forth make a low, the question is, can it make then a higher low? And that always signifies that buyers are coming in to buy before it retests. So we've seen this particular pattern in one version or another, more dramatic or less dramatic on practically all the stocks and indices we've looked at recently. But anyway, this is a good one. So it fell to 92 right here, as you can see, a higher low. Then shot higher, shot it back above its 20-day, its 50-day, and its 200-day moving average, on up here to about 118 or so, then came back to the 20-day, then started walking up the 20-day moving average, dove here for a couple of days down to 114, but jumped right back up and started kind of walking sideways again here, but certainly moving a little higher. Again, where it closed this Thursday at $123.14. Now, I like this pattern here. Of course, again, this is similar to a lot of the patterns we've seen recently, but what I like about it is orderly, and I always like orderly price patterns. And it looks here like the sky could potentially break out here if the S&P and the Qs can keep going higher, or at least behave, as I call it, not falling hard. It looks like this could possibly be a pretty good pattern on the SKY. The moving averages are consolidated, the 50 days trying to move over to 200. So if in the coming week the market is behaving reasonably well and the sky can continue to trade above the 20-day moving average, I will buy a small position in my trading portfolio, and I'm going to put my stop down here at 115. You may want to raise yours or even lower it, whatever you like. If and when the sky closes above, and I'm looking at prior highs here, if and when the sky closes above 132 up here, and you can certainly get in earlier if you choose to, but if and when it can close above 132, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the SKYY in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. In my training program, Trade the Trend to Profits, that's right here, you'll learn when to buy, how to easily manage your trades, and then know exactly when to take profits. And you'll make bigger profits while spending less time researching and monitoring your trades. Our new low price for this program is only $127. And by the way, some of my trainings listed here are priced at only $59. Now, when you order, you'll receive special bonuses, including 1 month of Metastock daily charts or Metastock real-time charts for free. And once you purchase, you'll have unlimited access to learn at your own pace. So, from our ever-popular 7 Steps to Successful Trading to how to swing trades successfully, very popular, how to trade the trend to profits, one of my favorites, how to read charts, great for novices, 3 winning setups, great for short-term traders, and how to bottom fish like a pro. Discover how my online programs can help you earn more money quickly and easily. Check them out now by going to the link on this screen, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.